Hello and welcome to our episode of FinTech Focus TV with me, Toby. Today I'm absolutely delighted to be joined into the studio by someone I've been speaking to for a little while now and been looking forward to getting on the show for a long time. Peter Lane, how are you?
Hello, I'm very well, thank you very much.
Listen, really good to have you on here. Jacobi Asset Management is a fantastic business that we've been hearing lots about recently. You're in a space there which I think is probably going to be one of the most talked about spaces of 2025.
Without doubt.
It's been on the menu for a little while, but I think there's a really exciting time, particularly with things that we'll be talking about a little bit later on, especially the US, etc. But we'll come on to all of that in a bit. There's lots to talk about in this area. We're going to have a jam-packed episode, so we'll try and keep it as concise as possible.
Yeah.
But there's lots and lots to go into. I'm really looking forward to it for a while. Peter, let's kick off by telling us a little bit about the business, telling us a little bit about your origin story, and start on from there.
Super, yeah, so thank you for having me. I'm really pleased to be here and have a chat with you about this. So I was co-founder and CEO of Jacobi Asset Management. We co-founded this sort of early 2021, so the idea came around about 4 years ago that there needs to be a safe and simple way for regular investors, not these tech-savvy crypto-native investors who are fine to buy Bitcoin in, on exchange, self-custody, whatever. Most people aren't like that, so we thought we need to create a vehicle that the majority of people who are just fairly simple in their investment strategies, how can they benefit from digital assets? Yeah. So we thought a regulated vehicle, an exchange-traded fund is the most simple way to do it. So we set about doing that. But my background is that I started working in the city the very day Lehman Brothers crashed in 2008.
No coincidence.
And so none whatsoever. And so I was working for a financial advisory.
That news got buried, speaking about what we're talking about.
It definitely got buried, yeah. It was, one of the worst days in history to start in a finance role. So I started as a financial advisor doing asset management and wealth management for high net worths and small to medium-sized companies. Mm-hmm. And I was doing that. I loved it, to be honest. I don't know how I ended up in crypto funds, but it was brilliant. I love talking to people. I love working out how they can construct a financial plan that gives them the life they want. And I think the most important thing in life is options. And financially, if you don't have any options, it's a very dark place to be. But if you can sit and think about, right, what does my life want to look like? And then speak to an expert to say, well, how do I get this? And then we could, as a business, then actually help them change the way they live their life for the better, is a really, really rewarding thing to help people do. And I really, really loved it. And then I was never really like a mad crypto guy. I got fully into it in 2017 when there was the big bubble, and then sort of when that crashed, like a lot of people I imagine fell out of love with it a little bit. But then one of my clients, he ran a crypto brokerage. He was a FinTech.
And this is just you looking at it in 2017 from a personal interest.
Personal interest, yeah. So I worked with a guy who was so obsessed, and he got the office so obsessed with crypto.
That's what happens.
That we did absolutely no work. We just sat watching crypto going up and down all day. And then he was super into it. And I think he carried on, and the guy that was running the company, he invested quite a lot of that period of time. Yeah. So God knows how much that's worth for him now. But good luck to them. Yeah. But I wasn't, I'm not a techie sort of person. I was not a crypto sort of person until I got drawn into, if these returns or this profile of returns can potentially continue and therefore maybe stabilize, that is game changing for somebody, even just making a small allocation to that sort of return profile in a fairly conservative portfolio. That can make a world of difference. So the problem then was, it's very difficult to do it. So I had some Bitcoin on a little ledger, which is like a little USB stick. And I went to check it one day and it just wasn't there. And I nearly lost my mind. I said to my wife, what have you done? Like, what's moved from my desk? Or have my kids taken it? Or something would happen. I thought, well, that is not a good place to keep. If I had vast wealth on that, I may have had a heart attack at that moment in time. Yeah. But just because somebody, my wife had cleaned up my desk and put it in a pot somewhere else, she didn't quite realize what it was. Yeah. So if that is the case, that you could actually lose a load of your assets, then as a financial advisor, I could never have said to anybody, this is a good idea for you to do if you don't understand it. Yeah. So regardless of the return profile, if somebody could physically lose it, I don't think I'd be able to live with myself advising somebody to have done that. Yeah. And so that's why when we started talking about creating a fund or an ETF, it meant that people could use their existing investment infrastructure to access an asset class which otherwise they may have been prohibited from doing because they're not, as I said before, a crypto native, tech savvy investor.
Yeah.
And those all came together and thought, right, this needs to be the way mass adoption takes place through ease of access. And I maintain that ease of access is the number one driver. It could be, even if it was a guaranteed, which is not, brilliant return for the next 30 years, if it's not easy, people won't do it.
Yeah.
So from my experience of dealing with individuals and some of these smaller companies, they don't really care as much as we would like them to care.
Yeah.
If they can get something that makes them feel like their assets are growing in the right direction, they can then get on with their life, their family, their job, their house, keeping their job at this instance. Those things are significantly more important to them than getting a small return higher on their portfolio.
Yeah.
So even if you could almost guarantee it for somebody, if you say it's going to be fairly tricky for you to do it, most people, I would say, wouldn't be bothered. And that's why the ease of access is super, super important, because that's what's going to get mainstream adoption. And Bitcoin historically has been volatile, and the more it's adopted, the less volatile it will be, probably.
Yeah.
And so therefore, to ease it into a less wildly swinging asset class, we need mass adoption.
Yeah.
And so exchange-traded funds are perfect for that, because they just make people's life easy. And so I think that will be, like we've seen in America, the ETFs that launched in America that are open to retail have had, by a country mile, record-breaking inflows and growth.
Yeah.
So the BlackRock ETF has got to 50 billion assets under management in less than a year.
It's incredible.
That is just mind-blowing.
Yeah.
And that's not because they were the first people to allow Bitcoin access. They were the first group of people, so there's quite a few ETF issuers that did it at the same time. But people that bought into those ETFs could have already bought Bitcoin. So it's not as if they were the first people bringing Bitcoin to the table.
Yeah.
They were the group of people that brought ease of adoption to the table. And so that goes to show that ease of access will be the thing that drives mass adoption.
There's always been those two sort of competing parts of it, and I guess your background sort of absolutely echoes that. Is, from where you were talking in 2017 to where you launched sort of 4 years later, the whole thing had to be about building trust and converging the various elements of traditional finance with decentralized finance and maturing the industry. Mm-hmm. So we've obviously been talking a lot about that on this show and other things that we've been doing for the last sort of 2-3 years. And I know the company were on a panel a couple of years ago. Talking about restoring trust in digital assets, mm-hmm. which you contributed to the conversation with, and I think that's a really fascinating point there of how it matures and how it becomes there, and adoption is a big part of that, and what drives adoption, what drives the confidence, all of those different parts around it at the same sort of time. Yeah. But it feels like it's a completely different world than 2017.
Without a shadow of a doubt. Without a shadow of a doubt.
But still with a lot of the potential to get those gains that people were talking about at various different stages as well, which makes it very interesting now.
It's a funny asset class, because most new investments that come out, or most new technologies that come out, they're usually adopted by, I don't know, like the FBI or militaries. Then they get adopted by wider government, and then they get adopted by institutions, and then they finally trickle down to retail investors. But this has taken the opposite approach. So it started off with maybe freedom fighters and crypto fanatics.
At best.
At best. Cypherpunks. So they've got the people into cyber and cryptographics got it straight away because they're cryptographic people. Then sort of more technology focused people got it. Mm-hmm. Then computer scientists and people that understand the mathematics behind it and what actually the coding all means. And so it's completely different. And only now, 15 years on, are governments and countries starting to adopt, which is completely opposite to normal. So given that the supply is finite, now you've got the big guys starting to come in. I mean, God knows where that then sends the price long term, because there can only, I'm sure, most people watching this will know, there can only ever be 21 million Bitcoin. But the actual scarcity of it is worse than that, because there's quite a lot of analysis done that reckons maybe 20% is just lost. So like I was saying earlier, you could actually just lose it. I'm sure we've all saw the guy who's trying to get the landfill site to dig it all up to find his laptop because there's £250 million of Bitcoin. If you can actually lose the Bitcoins, you can't ever actually retrieve them So let's say there's 20% lost.
Yeah.
Then there's quite a lot owned by Satoshi Nakamoto, who is whoever created Bitcoin. We don't know if it's a person. We don't. Well, it was a group of people, one person. Who knows?
Yeah.
But they own 5% of Bitcoin. Then you've got Michael Saylor and MicroStrategy. They own a significant amount of Bitcoin, and he stated he's never selling. Now you've got the ETFs own a significant amount of Bitcoin. They obviously will be liquid, but a lot of people will be holding them in long-term savings vehicles. So if you consider that there was 21 million available, you've lost quite a lot of that in the lost Bitcoin. There's other bits of assets held by people that are never going to sell. So I would say there's probably really, 14 million that could ever be bought and sold. So that means that it's even more scarce than the 21 million states it is. So if there can never be more than that, and adoption from countries is now starting, that's going to drive other countries to have to start just in case. So one of the real famous quotes from Satoshi is, it might make sense to get some just in case it catches on. So if you then have Donald Trump publicly saying that they're going to have a strategic reserve and they want to buy up to 1 million Bitcoin, well, you know that all the other countries that are vying for powerful country in the world, they will have to do something about that to try and make sure that if it does kick off, like a lot of Bitcoiners believe it will, they don't get left behind and America doesn't become the most wealthy country in the world by an absolute country mile.
It's kind of like a Bitcoin Cold War, a Bitcoin arms race.
Absolutely is. So Michael Saylor would say it's a digital capital war. So the more digital capital you've got, if that ever does become the global currency or some sort of reserve currency, and you've got more of it than somebody else, then you win. So you've seen that countries that have already adopted it have done really well. So El Salvador, they started buying Bitcoin a few years back, and they buy on a regular basis. And they're looking like they're going to be the first country that's ever been able to pay back their debt to the International Monetary Fund. So nobody's ever paid back the IMF. They just refinance with the IMF. But El Salvador have made so much money in their conviction on Bitcoin that they could actually pay their debt back. So that's unheard of for a developing country to be able to just pay off their debt and become financially free. So if they've made an example of it. They've done really, really well out of it. America's looking like they might start to buy up 1 million Bitcoin as of when Donald Trump arrives. I know that some countries are using their excess energy to mine Bitcoin. So if you've got, let's say in this country we've got a load of wind power that's just wasted. We could mine Bitcoin with that, and even if we don't see any value in the long-term potential of Bitcoin, you could sell a Bitcoin today for £80,000. So instead of paying to waste electricity, you could then use it to mine Bitcoin and then sell it immediately if you didn't want to keep it. If you do want to keep it, then even better in my opinion. But if you've got countries starting to do stuff, that's really when supply will almost run out.
Which creates its challenges as well, doesn't it, with where we're going to go. And so countries are moving into this sort of thing. Companies are doing it at the same sort of stage as well. So talk to us about what that looks like on a company basis at the moment and the benefits of that.
So a company, if you look at the financial planning of a company, it's not too dissimilar to a person. So every one of us needs cash to pay our bills today. We always need some sort of emergency fund in case the boiler breaks or whatever it is.
Everyone's favourite paycheck.
There you go, exactly. So then you want some sort of medium-term savings, and then you want some long-term investment for your later life, or to be wealthy when you're older, or you want to retire. A company doesn't need to do an awful lot different to that, because they need money today to pay for staff, services, electricity, all their bills, etc. So they need money to pay for that. They need then some sort of cash sat there in case there's a hike in something. Let's say, for instance, energy prices in this country have gone through the roof over the last few years. So therefore, they either need to take some of the spare money they've got or start charging people more. And therefore, if you had some balance sheet cash and investments, and that grows ahead of inflation, then you will be wealthier in a few years' time than you are today. So a lot of companies have started to look at holding a portion of Bitcoin on their balance sheet as a long-term investment, just like you and I would invest into a pension for the long term, because we want to be able to retire wealthier. So if a company in 10 years' time can either take the money that they've been making now to then plow it back into their business to grow the business, or invest some of that in Bitcoin, they'd have to run a calculation of which of these two makes us wealthier. So you can try and grow your business more, you can try and cut your costs, or you can invest some of your money to grow your assets, which you could use as collateral to borrow against, to then invest in the company, etc. Either way, it makes you wealthier as a company. So if you're a publicly listed company, your shareholders then get the value from that. If you own the company yourself, then obviously you can grow the company a bit quicker or make it more valuable. So either way, if a company, just like a person, held a portion of their assets in Bitcoin for the longer term, and when I say longer term, 4 years is the Bitcoin halving cycle, which typically, historically, has meant what the charts then go down and then they build themselves back up. So the more mainstream adoption takes place.
That's 4 year cycle.
Yeah, so it's every certain amount of blocks, which coincides with pretty much every 4 years. So that means that the rewards the miners get for mining Bitcoin halve. So let's say, for instance, you and I were mining Bitcoin and we would get 1 Bitcoin if we created the block on the blockchain. In 4 years' time, that reward is halved. And then so we'd get half a Bitcoin. Then in 4 years' time after that, you would then go to a quarter of a Bitcoin. And that's how they cap the supply, because the mining of the Bitcoin reward goes down and down and down and down and down until all of the Bitcoins that have ever been mined are mined. So if you have a 4 year cycle, the worst case scenario, I think the statistics I saw the other day had ever been, is if you held for a 4 year period, the worst you'd have ever done is 23% up. So that, if you then say, well, that's the worst case scenario, if you could then monetize the Bitcoin network growing without you having to contribute at all to it, so it costs you no man hours, no additional cost of running it, all you do is a trading account and you put some of your excess cash in it. So what we would look at is if a company has a certain amount of money on their balance sheet, they could then work out what their runway is and therefore work out how many years worth of runway have they got in cash. If they then have more than, say, 4 years worth of money, then what are they going to do with that money other than sit on cash? So cash rates, went up recently, but inflation went up even more. So therefore, that cash sat in cash, it might be getting them 4 or 5%, but then it's been eroded by inflation significantly. So if you can invest that, and I'm not saying they should invest all of it in Bitcoin, but if you invest some of that capital into a variety of different assets, which then can grow or try and be a hedge against inflation, then you'll be wealthier in 5 years' time than you would had you just kept it in cash. So therefore, if a company has more cash on their balance sheet than they need to then pay for their expenses for the next, whatever the year, it could be 2 years, they might be comfortable with 1 year, whatever it needs to be, that's the finance director's comfort level and the board of that company's comfort level. But if they invested some of that excess cash into Bitcoin and that grew at a faster rate than they could grow the money by investing it back into their company, they would be wealthier and more valuable in however many years' time than they are today. So if a company...
Makes perfect sense, right?
Well, it does, because if you look at, companies generally don't invest money, and I think it's the finance directors, they have to be cautious, obviously, because they can't lose the money because they need it. But if you've got, I don't know, 10 years worth of money sat in the bank, you're devaluing the company if you don't do something with 6 years worth of that money. And whether that be, you go and find some equities or you invest it in some bonds or whatever you do, your job is effectively to future-proof the financial power of that company. And Bitcoin has, an investment like Bitcoin has never really been seen before, because most investment asset classes aren't just created. You could say the tech stocks and the internet stocks have been a great vehicle over the last 25 years for people to grow their money, but nothing's just been invented like Bitcoin as an asset class. So if utilizing some spare company money helps grow your financial power going forward, then that can only be a good thing for that company.
And that's becoming more and more adopted, as you say, right now.
So MicroStrategy are the golden guys of this. So what they do is they raise money and they buy Bitcoin. Then they use that Bitcoin to create products. So they would then go and create some convertible bonds. They would try and reduce the volatility for investors who don't want the volatility of Bitcoin but want the eventual returns of it. They have a suite of different things they then go and do with their Bitcoin and products they create off the back of it. So they have been the top performing stock in America for the last 4 years since they started doing it. So they've outperformed Nvidia, Apple, Google, everybody. Metaplanet in Japan have done a similar thing, and they are by quite a way the number 1 performing stock in Japan. There's a whole host of other companies now starting to do this. And we saw Microsoft just recently voted that they're not going to adopt Bitcoin at this point. They might do in the future. Amazon are looking at the similar sort of thing, but I think once one of those big American tech stocks start doing it, to keep up with each other, they'll all have to.
You wouldn't have thought.
And so it'll be like the countries vying for most powerful. You'll then have the tech stocks vying for who's the most powerful. So Tesla have already done it, for instance. So Elon Musk, a big advocate of Bitcoin and crypto, they bought Bitcoin ages ago. So they've had, God knows, hundreds of millions worth of Bitcoin on their balance sheet for quite a while. And so other companies will eventually start to do that, because if you look at the amount of cash they've got, the cash that Apple holds is insane. The amount of cash they've got just sat there doing next to nothing, earning nowhere near as much as it could do had they could just buy Apple stock and it would outperform it. Yeah. So companies will start to do it, and I think the trigger will probably be if America starts to, publicly, because a lot of countries are doing this without publicly saying it at the minute. Yeah, yeah. So if they
everything in the States is going to be public on that side.
Well, absolutely, and you've got some states already front running it. Yeah. So Texas are trying to front run it. I think the Pennsylvania state funds are trying to front run it. Yeah. So if you've got states trying to buy it before America starts as a country to buy it, you can bet your bottom dollar there's other countries thinking, right, how do we keep up with that? And they'll be buying it. Unfortunately, in this country, it doesn't look like we're buying it. No. But we do have quite a bit from, I think, confiscated Bitcoin. So at least we've got some.
Is that where it comes from?
Also, America have got quite a lot. They've got like 240,000 Bitcoin that is from confiscated proceeds of crime. Yeah. This country's got, I think, 60,000 from proceeds of crime. Okay. So the country's got some. Yeah. It's not looking like it's going to buy any more. Yeah. But America have made a big point, and I think it was a big strategic ploy in Donald Trump's campaign to be crypto friendly. Yeah. And clearly worked.
And it's a massive turnaround, isn't it, from where it was in the States? Yeah. 2 years ago, it was. Yeah, pretty much the end, wasn't it? Yeah.
Yes, that's a really good point you raise, actually. And where Bitcoin has got to from start to now has been despite regulatory, legal, and governmental resistance. Yeah. So once it starts to get legal, government, and regulatory cooperation, where can that drive it? So if you look, you've got at least 4 years of an American administration that's crypto-friendly. Pretty much everyone who seems to be in the American version of the cabinet either owns crypto or is super crypto-friendly. Yeah. If, let's just say J.D. Vance then goes to be the president for the next term, and then you may have 8 years of potential friendliness towards Bitcoin. Yeah. So where it can go with 8 years of government-led, country-led, regulatory-led
it's gone in the last 8 years without it.
Exactly. So where it can go, I don't know, but I would hate to miss out on it.
Yeah, yeah. Well, you're in the right spot for it.
I think so. I only wish I had more.
Yeah. So let's talk about the long-term potential of Bitcoin as an asset. Yeah. So there's a lot of movement in this sort of space as we've been hearing. Yeah. There's a governmental and macroeconomic sort of focus which all points in the right direction for it all. You've dedicated the last 4 or 5 years completely to the whole sort of area, so I know where you're going to be sat on it. But talk to us a little bit about what it looks like and what the future holds.
Yeah, I think it'd be foolish to say we think it's going to do this % for the next however many years, because you can't guarantee anything. Anything can happen. Like markets weren't in a too bad a place and COVID happened and look what happened to the world. So there's always something that can happen that can derail anything. But if we look at the history, and that's by no means saying that's going to happen going forward, but historically, since Bitcoin started and now it's averaged about 150% a year. Yeah. So I would rip those numbers completely down and say, well, if we think there's going to be some sort of future growth profile, why don't we look at a really, really scaled down version of that? So I've looked at what would happen if it did 10%, 20%, 30% a year for the next 30 years, because I see it as a long-term asset. It's nothing other than a long-term asset, in my opinion, because it's volatile on a daily basis. Yeah. It's growing on a long-term basis. So I looked at what if it did 30% a year for 30 years. Mm-hmm. And if you invested $1 million, I'm not saying everyone has to do $1 million, but if you invested $1 million and you just left it for 30 years, the compound growth from that would mean by the time you get to it in 30 years' time, it'd be worth 2.6 billion.
Yeah, that's not a bad return, is it?
And that's a fraction of what it's actually done in the last 15 years. Yeah. So Michael Saylor is one of the the most famous guy in Bitcoin at the minute, but he thinks it's going to do 29% for the next 20 years, so not far off the 30% figure. So those models make it look like it's going to be millions per Bitcoin. At the minute, we're at $104,000 a Bitcoin. So if it does go to millions per Bitcoin, then the value change that could make to somebody's assets, so if it be a person, a country, a business, or whatever, it's unheard of, to be honest. So it's like investing in the tech bubble without it ending up being a bubble. It just carried on. Yeah, yeah. So if you can look at what it's done historically, I would scale that massively down, because the more adoption you have from institutions and countries, the less volatile it'll be. So that should then wean away a little bit. But whatever it is, it's a very difficult conversation to say, well, I think this is going to do better than it. And I can't see, inflation's high at the minute, so you're definitely not keeping cash, right? Yeah. Stocks are doing well, but nowhere near. I think the second best performing asset class in the same period that Bitcoin has been alive is the Nasdaq, and that's done 16%.
Yeah, and had its volatility over the last couple of years in particular.
So even if you scale down drastically what Bitcoin has done, and everything else stayed as it has done, it would still be by quite a distance the best performing asset class in the world. And so I'd never make price predictions from a long-term basis, but I'm fairly confident. We'll see it in the 200s per Bitcoin next year, especially if there's country adoption. Public country adoption will drive all the other countries to have to do it.
Yeah.
And if you sort of get country-sized purchases, that can only drive Bitcoin one way.
Yeah.
So I think the long-term potential of it will probably outdo any other investment that somebody could make right now. That somebody could create some better investments in 5 years' time, but for something to outdo Bitcoin, it would have to have a really incredibly compelling story behind it. Because at the minute we see that countries are starting to adopt, institutions are starting to adopt, there's the biggest asset managers in the world are starting to create Bitcoin ETFs that have been incredibly popular. The more the world adopts it and makes it a mainstream accessible product, the more that will drive demand, and we already know supply is going down.
I think you're just talking about the fact of it being a long-term play.
Yeah.
That's the encouragement for me, because I think there's so many people. Even go back to the sort of retail element of it all. Yeah. You talked about 2017 and your office becoming obsessed with it. It was exactly the same in offices all over the place, ours included.
Yeah.
And there were. I've always said that this has felt like a. The one-eyed man in the land of the blind. It's that if you've got a little bit of knowledge around it, you've got the ability to do that. And people with a little bit of knowledge about it weren't doing it as a quick get-rich-quick scheme over the course of that sort of stage.
Yeah.
Pawning watches to try and get a quick return on what they were getting back from it. And I think when people saw the highs and lows and were putting in money and then seeing that disappear and then getting it out of it, and it was never about that long-term adoption view of it all.
It wasn't a sensible approach.
Yeah, exactly. And when you're starting now to talk about companies and stakeholders within companies, when you're talking even more so about countries, that's where it starts to get really interesting. Absolutely. And where it becomes a sort of grown-up version of where it was before.
100%.
And look, we know all the benefit of the tech that underlies it. I think probably if you're talking about asset managers, even maybe 3-4 years ago, they were much more interested in the technology behind everything than they were actually in the whole idea of it as an asset class.
Yep.
I think the technology still remains staggering.
Yep.
But on top of it, I think people are looking at it now as a genuine sort of player. So so it becomes really exciting as to what more we think.
And I think that's where Bitcoin and other cryptocurrencies differentiate.
Yeah.
Because if you said to me, Nate, tell me 5 cryptos that are going to be around in 20 years' time, I genuinely don't think I could put my hand on my heart and say, well, this one will be around. But Bitcoin will. I'm super confident Bitcoin will. So therefore, if that's the one. If you're not looking for these, get-rich schemes, get-rich-quick schemes, Bitcoin long-term...
The ICO craze and all that
sort of stuff. Yeah, exactly. So, short-term gain comes with risks.
Yeah.
Bitcoin obviously comes with risk as well, but if you look at Bitcoin as a 20-year play, then if in doubt, zoom out. Charts on a daily basis scare the life out of people, but if you zoom out and you look at what's happened over the last however many years, not just for Bitcoin, but any asset. So I've got a lot of clients that were worried about their pension funds coming down, but they always come down. Then they always then go back. Then they always come back down. Then they'll always go back up. So if you're investing for tomorrow, Bitcoin's not for you. If you're investing for tomorrow, nothing really as an investment is for you. If you're investing for 10 or 15 years' time, then you start to have options, and then you start to have a degree of, dips, and then they'll come back. So if you're needing the money back urgently, don't invest it in anything that's potentially risky. If you're happy to tuck it away and not worry about it for 10 years, then you've got a world of things that you can look at.
Let's finish by talking about you and the business. So Jacobi's on a journey, been on a journey for the last 3-4 years or so. Tell us what 2025 looks like when we're talking about being in the eye of the storm of one of the most exciting times and periods of one of the most exciting things that's happened financially over the last couple of decades. Really great space to be. What's it mean for the business? What's your plans?
So we would love to try and grow our product range. We think Bitcoin is great, and we love having a Bitcoin ETF. Other investors are looking at other stuff. So obviously Ethereum's quite a big one. Solana's pretty hot. The potential for those things as an investment, people are keen to talk about. I think we want to try and, the FCA don't allow UK retail investors to buy Bitcoin ETFs. Our fund is governed by the Guernsey Financial Services Commission, and they follow a similar sort of methodology. So we think eventually retail adoption will be allowed in this country, and our Guernsey regulator will allow us to sell to retail. But I think there's other countries around Europe that have got quite a high potential to want to adopt a Bitcoin ETF. But we think there's other areas in sort of other countries that don't have the regulatory framework to create their own ETFs. So, for instance, the UAE's got unbelievable crypto adoption, massive crypto adoption, no crypto ETFs. A lot of people there are happy to just buy Bitcoin, spot Bitcoin, because they're usually, if you go and live in Dubai, it's because you've got a lot of money and you're happy with investment risk. So we think there's some pockets of the world that are rife for having some products that we've got. We just need to make sure you partner with somebody in that country that's already trusted, they're already known, they've already got their clients, etc. And I think countries that have an appetite for crypto but don't necessarily have a regulatory framework to create their own products, that is a really exciting opportunity for me to then go and find some people in that region. We can work with them and do some sort of product whereby they could then go and list it locally. They can sell it to their investors where they're already known, they're already trusted, they've already got the relationships, and that could then piggyback off our infrastructure that we've managed to build out of our Guernsey structure. But where crypto goes, I've got no idea. Hopefully up.
A few ideas.
But it's exciting to be right in there, as you said, in the eye of the storm.
Yeah, absolutely. Well, listen, keep up the great work. Love what you're doing. Love the passion and the enthusiasm you got for everything around the sector, the business, everything that you've been doing as well. So, I always want people with that sort of genuine passion for things to do incredibly well. I've been educated during this session. I think it's really exciting what you're talking about. I think there's some thoughts I need to take on everything.
Yeah. Send your CFO to talk to me.
Yeah, exactly. But thoroughly enjoyable. Peter, thanks ever so much for coming on the show.
Toby. Thanks for having me.
People that are watching this want to find out a little bit more about yourself and the business. What's the best way for them to reach you?
Yeah, so if you LinkedIn, Jacobi Asset Management website is jacobiam.com. If you Google us, we're around.
You'll find it. We'll find you.
Yeah.
Well, listen, thanks ever so much again.
Great.
And thank you
very
for
much.
watching. We'll see you soon on the next episode of FinTech Focus TV. Thanks a lot.